In this video I'm gonna share what I think about the 3M company and stock. In 2020, 3M had a earnings growth of 19%, but is 3M able to keep up that great growth? Let's find that out right after the intro. Hi folks, my name is Philip and this channel is all about growth stocks. If an investor wants to be successful, it's important to choose a wonderful company and to buy it at an undervaluation period. With the current market situation, an all-time high and an 88% overvaluation, according to the Warren Buffett indicator, it's more crucial than ever to check to not buy a stock at its peak. And also to not fall in love with the stock. You always need to be critical about every stock you buy and own. Let's see together if the 3M stock is such an opportunity. 3M is currently trading at $197, has 579 million shares outstanding and a market cap of 114 billion. While Apple is often the best example of a company for its innovation success, 3M is a global innovation company that has remained under the radar for its long-term innovation plans and successes. 3M has made significant contributions to the healthcare, communications and office business, including bringing some of the world's most recognizable brands, Post-it notes and Scotch tape, to the market. The unique selling point of 3M is their brand. Their products are simply known to just work and to don't trouble you like the cheaper products. 3M's top competitors include General Electric, Emerson, Honeywell and Corning. Their competition is extremely diversified because 3M is operating in so many fields. I create videos just like this one you are watching right now, every week. If you like the videos so far, it would mean the world to me if you subscribe, like and comment to help me make better videos. 3M was founded in 1902 as a small-scale mining venture under the name Minnesota Mining and Manufacturing Company. Over the years, 3M has grown into a firm employing 90,000 people and with 60,000 products used in homes, businesses, schools, hospitals and more, touching most industries on Earth. 3M produces an almost incomprehensible 60,000 items. The company organizes those numerous operations into four main business segments: safety and industrial, transportation and electronics, healthcare, and consumer business. The biggest segment out of these is the safety and industrial business area. It is responsible for the biggest part of the sales, 37% of all sales, with 11.8 billion. Let's see on the website what this segment does. Serving the global industrial, electrical and safety markets. The Safety and Industrial Business Group consists of personal safety, adhesives and tapes, abrasives, closure and masking systems, electrical markets, automotive aftermarkets and roofing granules. The next segment is transportation and electronics, which is responsible for 27% of the sales, with 8.8 billion in revenue, focusing on global transportation and electronic original equipment manufacturer customers. The transportation and electronic business is made up of electronics, display materials and systems, electronic material solutions, automotive and aerospace, commercial solutions, advanced materials and transportation safety. The healthcare segment is responsible for 26% of all sales, with 8.3 billion. This healthcare business group serves the global healthcare industry and includes medical solutions, oral care, separation and purification sciences, health information systems, drug delivery systems and food safety. The smallest segment are the customer products, with 17% and 5.3 billion in sales, delivering service to our global consumers. The consumer business group consists of home improvement, stationery and office supplies, home care and consumer health care. This segment also operates products like Post-it. If you add up the decrease and increase of the different sectors, you still get a growth of 1.5% on the segments in total. 3M is producing steady sales of around 30 billion over the last 10 years. The profit is around 7 billion per annum in the last 10 years. In 2020, they invested 1.9 billion in research and development and 1.5 billion in capital investments. If you add all those numbers up, you get 19.6 billion. That's the amount of money they need every year to run and operate their business. Depending the possible investment, I rely mainly on risk scores from stock legends. I use the Altman Z-score and the Petrovsky F-score. With the Petrovsky F-score, I get 8 out of 9, which is near perfect. The Petrovsky score rates mainly the fundamentals, and with the Altman Z-score, I get 4.65, which is also really safe. It rates mainly the earnings and earnings growth. The earnings growth is also the part where 3M could be a little bit better. Depending the depth, they have an equity ratio of 27, which is a great high value in their market. It means from the money they need to operate their business, they are able to provide 27% on their own, and the rest is borrowed capital. If you add up the decrease and increase of the different sectors, you still get a growth of 1.5% of the segments in total. And in 2020 they invested 1.9 billion in research and development and 1.5 billion in capital investments, which is a great sign for me personally for the future of 3M. 3M paid a dividend with a yield of 3.36% in 2020. They are also doing this since over 100 years. And they are also increasing it over the years, always by a few percent. To check if 3M is expensive, let's at first check the price-earnings ratio, and that is at 20.16. That's pretty much on average. With the discounted cash flow model, I get a value of $144.6 per share, which is 36% over the current price. That's an indicator that 3M is a little too expensive, as most stocks at the time. Overall, 3M is a great company according to the fundamentals, and with its business segments, it is also diversified. Depending the future, I personally would like to see them invest even more money to maybe increase their growth momentum a little bit more. But they are investing in the future, which is a good sign. According to the DCF model, the stock is currently a little bit too expensive. But it's definitely not a growth stock. It's more of a dividend stock, which still grows. But don't trust just me, do your own research. That's really important, guys. Thanks for watching. If you liked the video, please subscribe to the channel to not miss any new video.